All right. Okay, I am recording and we are ready to start. So, how have you been? Happy spring. I got my green on for spring.
There you go. You know what? It's warm. It's gonna rain, but it's warm. I will take it.
Yeah, exactly. Wow, it's like been such a great March, really. It's been a great winter, really. I don't know. To me, it feels like it's been a very mild winter. So, um,
Minus that stretch of 3 weeks where it didn't go above 10. But yeah, besides that, it was a mild winter.
right? Yeah, exactly. Right. So, anyway, well, let's jump right into it. I've been looking at the charts that I always look at, and have you been busy? Has it been? Have you been
Oh,
like crazy busy?
it's been insane. As you talked about last month, it is a seller's market out there, and
Yeah, it really.
buyers are struggling right now. I have
And it only.
clients that have lost out on 10 plus offers, and they're still going.
Yeah. Oh gosh. Wow. 10 plus offers. Oh my goodness. My goodness. All right. Let me start back at the beginning of these charts and I want to make them full screen. Okay. So our MLS service puts these out every week. They update them. They put them out Monday afternoon. So we always are looking at information that's a week old. Sadly, I guess we'd have to do our call on Tuesday if we wanted it a little fresher, but it's I think the information is timely enough that it's okay. So
Oh,
the
for sure.
so the green bars are the previous year 2020, and the blue, well, in 2019, and the blue bars are 2021. Well, I guess it is only 2020, right? Well, we don't have an October. Well, anyway, never mind. Okay, so this blue bar, this confuses me. These simple things confuse me, Terrence. so
Okay.
so this first bar is 10/12 would be 2019, and the blue bar. Okay. Oh, it tells me right. No, it doesn't tell me. And the blue bar would be October of 2020. So, okay. All right. But then when we get over here, we're actually looking at 2020 and 2021. Anyway, so there we go. But the point being that I want to point out is that we actually were pretty much ahead of the previous year. I mean, surprisingly, right? In closed listings, 2021 has, in the last 6 months have been there's been more closings than there was the previous year, which I find a little amazing. And these are properties that are under contract. I mean, we are so far ahead of the previous year what we were doing. It's like just kind of an amazing chart, I think. And these are the new listings. So this kind of tells the story right here, I think, that our listings coming on the market are not keeping up with the previous year. And but things are selling off the market. That's why you've got buyers that are making 10 offers and not getting their property because there's just
Right.
not enough inventory. I mean, we have a real crisis in inventory. I was reading an article in one of the trade publications about a week or two ago, and that was what they were saying. Yeah, there's a real estate crisis. It's in lack of inventory. There's not there because of the Great Recession and whatnot. I mean, there was just it's like a perfect storm of circumstances that have caused just a lack of inventory. And I don't really blame a seller if they don't want to have strangers coming into their house during the pandemic. I mean, it
Right.
makes complete sense, right? So, I mean, a lot of people have been making a lot of changes to their lives because of the pandemic. These are proper. Now, the rental market has not been as active as the sale market. And I think the story there is that people are deciding instead of renting, they want to own. And that's probably something that's has to do with the pandemic, I'm sure. And these are just the open houses, and open houses have been well, I guess they're actually down a bit because we don't have the inventory to hold open, and things are, are moving.
Right. Exactly.
right? And then these are the showings, and we're pretty much following the trends. This big dip that we see here, of course, is last year when we locked down, but then once we came back, it pretty much followed the trend line, and I think we're this year following pretty much the trend. This must have been when we had the big snowstorm or something here that week.
Yeah.
But we're pretty much, I think, following. Now, this is another interesting chart. The gold bar is the current sold prices, and the orange bar is last year's sold prices. And you can see that we are consistently above last year in terms of what actually selling for. I mean, prices are definitely up. The rental market, not so much. Rental markets seems to be pretty flat, but again, I think it's a factor of and I did the info sparks, and this is a whole Chicagoland. So this is a huge, all property classes, the whole Chicagoland area, all property types, and I'm going back the full from 2008 when they first started making these charts. And I just kind of like this big picture view because it is a very, very big picture view. But it just shows here we are in the depths of the Great Recession, and we've been slowly, gradually coming back. We finally here in June of 20. I mean, it kind of flattened out right in here last year when we locked down. But we didn't actually come back to pre-recession pricing until last spring. I mean, I just, it's like such an amazing thing, right? Taken us that long to come back. And I think that's another story of why there's so much pent up demand too. I mean, it's just, I think people finally are feeling confident. I mean, yes, it's the low interest rates, no doubt, but there's a lot of other factors that are going on here in terms of market values and the market coming back. But look at what it's done since June of 2020. I mean, it is now up to 270. I mean, that's a $20,000 price increase in, what is that, like 8 months, something like that? I mean, that's a pretty significant price jump, I think, in that period of time. What are market times doing? Well, again, here's the Great Reset.
Oh, boy.
Right? And market times, of course, were up a little bit last summer, when we, and they're starting to come down. Not as much as you'd think. I mean, this is a pretty 90 days, 82 days, and 10 days. I mean,
no, there's nothing staying on the market for 82 days.
I know, right? I know, exactly, right? And then,
not even 82 hours nowadays.
And then, of course, month supply of inventory. And this is a number, the rule of thumb on this is if you have 6 months or more supply of inventory, you're in a buyer's market. And of course, we haven't been in a buyer's market since, well, this is January of 14 is when we were pretty balanced. And if it's 6 months or less supply of inventory, then you are in what's considered a seller's market. It was actually a pretty balanced market through here, 2013, 2014. But it's been slowly coming down. And of course, now it's plump. And right. And here again, here's homes for sale. This shows our crisis and lack of inventory and under contract. I mean, wow, right? I mean, what a spike here. So that's what's going on. Okay, I'm gonna stop talking. And Terrence, how about you share with us some of your insights?
Yeah, so I think today what I was going to go over was the differences between different types of approvals, because there are a lot of terms and verbiages being thrown around out there, and I want to make sure that people understand. So first thing between qualification and approval, qualification, pre-approval, and actual initial approval. So qualification. So when someone fills out an application, we go through, we look at income, assets, liabilities, credit, to find out what they're qualified for, how much home they can afford based on their specific situation, what they want to pay on a monthly basis, what they're looking to put down. And we get a general idea of how much home they can afford so that they can go out with you and find the property that they want. That's qualifying. So we have them qualified for roughly up to a certain amount. But again, it's based on their comfort. So if they want, they could be qualified for a home that costs this much, but they only want to pay for this much. So that's what we figure out there. Mm-hmm. From there, pre-approval means that we have run the numbers on that specific property and know that they're going to be able to finance that particular home. So we take that pre-approval letter, send that over to you, Mary, so that you can package up and submit their offer. So backtrack a little bit, qualification, they know, here's sort of the budget, in home prices that we're looking at for them. Mm-hmm. Then you start your search. You find a place, then I run the numbers on a specific property, you get a pre-approval. Okay. Now, once we actually start the underwriting process, which is, we're under contract, I have their documentation, I have their application, I submit to underwriting. Mm-hmm. The underwriter is going to give what's called a conditional loan approval, which basically means that they verify all of the information that we gave them, the documentation matches up to the application, and the buyer is approved for financing with conditions. Conditions are things that need to be satisfied before the loan is cleared to close. Very simple things could be, updated pay stubs, updated bank statements, letters of explanation for any questions the underwriter may have, appraisal, insurance, title work. Those are the conditions that will work to satisfy to get the buyer cleared to close. But that is essentially the big difference between qualification, pre-approval, and loan approval, which I know there's a lot to go through, but as long as everyone is, honest up front, we do our job up front, there shouldn't be any issues with any of the three steps of the process.
Right. So as I understand it, a qualification is more like if the information that the buyer has given you is accurate, based on what they've told you, then this is what you will qualify them for. And a pre-approval, exactly. Are there not like pre-approvals where you've actually run their credit report and you've verified?
No, so we do. So we will run credit first because we have to know something called debt to income ratio. That is another factor that goes into actual qualification. So debt to income ratio includes the future housing payment. So we look at their outstanding monthly debts, their gross monthly income, and then we also factor in the anticipated housing payment. And that's another way we can figure out how much home that's how we figure out how much home they can afford.
Mm-hmm, mm-hmm. Something that I have been running into is because the way the market is, I've actually been working with a couple of buyers that actually have cash in the bank and they're cash buyers. I mean, they're legitimately cash buyers. And what I mean by that is they've got the cash liquid and they could write a check for it tomorrow if they needed to. Sometimes buyers will make a cash offer. They don't actually have the cash in the bank, but they know that they're very solid financially and that they have no issue with getting a mortgage. But, and maybe you can speak to this a little bit, Terrence, because I find that there's quite a difference between having the cash sitting in a bank, an investment account. They're not going to have it sitting in a bank account today, but liquid in an investment account, and having the knowledge that you're financially able to get a mortgage. Maybe you can speak to that a little bit, the difference there. I mean, one of the things that I say is that, a mortgage not only involves the buyer, it also, there's two parts to a mortgage. It not only involves the qualification of the buyer, it also involves the property too. The property also has to qualify for the mortgage. in terms of it has to appraise out, and there can't be repairs that need to be done, and things like that. So maybe you can speak to that a little bit.
Yeah, sure. So with, doing a purchase, with financing a purchase, when obtaining a mortgage, there are certain, standards and guidelines that the property has to hit. Condo, single family home. Loans have to adhere to Fannie Mae and Freddie Mac guidelines, which are, they're the governing bodies over mortgages. So, with condos, they have to pass a condo review. There have to be so much going into the reserve. There, cannot be a certain percentage of one owner in a property. Single family homes, there aren't really as many guidelines and restrictions, but financing, obviously there are hoops you have to jump through when you want to borrow hundreds of thousands of dollars. When you're a cash buyer, like you were speaking, you, for the most part, have the cash liquid, or easily accessible. And, sometimes those offers are stronger than financing offers. From a seller's perspective, you got to look at it that way. They say, well, there are less issues that we have to overcome, less hurdles we have to jump through, potentially, with a cash buyer. But, obviously the big advantage with financing is that you keep yourself a little bit more cash liquid,
right.
Especially with the way interest rates are. I mean, there's no point not to.
Right.
Some people just want to and don't want to worry about mortgage, and they've been saving up this money for,
right. And that actually, well, I mean, the only reason I raise the issue is because I've had a couple of different agents say to me, and sellers, well, it's all cash to the seller. So at the end of the day, what difference does it make? And I'm like,
right.
no, actually it does make, I think that's just an agent that doesn't seem to really know their industry the way they should, but hey, that's me. But no, I mean, you but you actually bring up a really good point too, and that is even if you have the cash, and that's another possibility, that a buyer may actually have the cash sitting in the bank, but why use it? Why not at the current interest rates? And what are the current interest rates, by the way? What are we seeing these days, Terrence?
Oh boy. Well, like we talked about last month, they've been slowly ticking upwards. As things have started to open back up, the economy started to flourish again, if you will. They're steadily ticking up. 30-year single family home, they're still under 3, but barely. It's going, but like I said, it's not shooting up at a very fast rate, but it's a slow progression upward. The lows that we hit end of last summer, last fall, we're not there anymore. Mm-hmm. But they're not where they were 4, 5, 6 years ago. They're not in the 4s, 5s, and 6s. They're down. Yeah. They're still in the high 2s, low 3s. So I would still encourage people to stay out there and do what they can.
I mean, that's an amazing. I thought that the rates were actually higher than that. I thought they were more like in the mid to high 3s. I didn't realize you could still get a 30-year loan, fixed rate loan at under 3%. That's pretty amazing. That's probably with 20% down and A1 credit and all that stuff. But yeah, I'm sure that
it's doable.
that's amazing. So that's actually really great news. Yeah. So rather than use your own cash, why not tap into at that rate? Why not get the more money if you can? But anyway, I don't think I have too much more I want to add to that. But just to say that as a buyer, there's no seller in this market that's going to consider your offer seriously without having a letter from someone like Terrence, or
exactly,
who's gone through your numbers and has said that yes, we've looked at the credit, we've looked at the property, and we can with pretty great confidence say that this loan is doable. So that's an important step. I mean, you're not going to be able to buy. You either need a proof of funds showing you have the cash sitting in the bank, or you need to have a pre-approval, and there's no other way you're going to probably be able to get that property in today's market.
Exactly.
I mean, what I'm seeing, it's really tough market to be a buyer right now. What I'm seeing agents doing is they take a listing, they get it all ready to come to market, with the photography and the staging and all the things that have to happen to bring the property to market, and then they schedule an open house. They put it in the MLS on Thursday. Maybe Friday morning. They schedule open houses for Saturday and Sunday. You get out to the open house. You have to stand outside the property for 20, 30 minutes while they take everybody through. Because of COVID, you can't just walk in. They have to take people through. And by Sunday night, first thing Monday morning, all offers are due, and the seller takes one, and boom, they're done.
Yeah, pretty much.
I mean, it's tough, and I just figure that you're gonna make 2 or 3 offers before you get one. I think
at least.
I had a situation with my cash buyer that he made a full price offer, thinking cash. We can close whenever the seller wants. He's cash. The agent called me back and said, is this your client's highest and best offer? And I'm like, well, it's cash and we're giving the seller what they're asking for. It seems like the seller ought to take that offer.
Yeah.
Right. And she's like, well, we've had many offers and all of the offers are over asking price. And I'm like, really? So I called my client back and I shared that information with him. He came up $10,000 over the list price and did not get the property. He was not the winning bidder.
Yeah.
So
yeah, that's pretty common.
Yeah, so it's a tough market out there. It's definitely tough for a buyer. It's a nice market to be a seller, although
oh yeah,
it's stressful either way, either side of the equation. But obviously, it's better to be a seller than a buyer.
Right now it is.
So we need inventory. We need inventory. So if you,
yes, please sell your homes.
So if you're thinking about selling, give me
Mary, please.
We'll get you hooked up, and of course, if you want to jump into this crazy market, and prices are only going to continue to go up. I'm sure that's so. I mean, they're not going to be going lower anytime. I think I showed with the charts and graphs. You can see that we finally have come back from the lows of the Great Recession and back to where we were before all of that happened, and I think it's only going to go. I know that builders are starting to get back into the market and build because they see what's happening. There's not enough inventory, and they're taking advantage of those situations too. So, and the interest rates are still phenomenal. So we're slowly starting to reopen. People are getting vaccinated, and it's spring, and it's all good. So
exactly.
So anything else we want to add to this conversation, Terrence, or are we good?
I think we're good. Nothing else I can think of. Obviously, if anyone has questions, please reach out to either of us. We're happy to answer.
Yeah, yep. And if you need a pre-approval or a pre-qual or whatever, by all means, reach out to Terrell at Molitor. And if you need help jumping into the real estate market, you can reach out to me. And obviously, I'm very happy to help you with that. So everybody have a good month. We'll be back here next month with the update, and hopefully by then we'll see more homes on the market, and we won't have such a crisis of inventory.
Exactly.
All right, take care, everyone. We'll see you next month. Bye for now.
Thanks so much.